That's why I love capitalism so much, is because it's a system that's predicated on incentivizing people to do the right thing.
I'm curious to what could you take on the biggest frustration when it comes to capital gains tax and the 1031 exchange, because you are an expert real estate investor and you teach others how to do this. So I'm curious, Daniel, what would you say is the biggest frustration when it comes to capital gains tax deferral on the sale of businesses, crypto, stock, primary homes, and the 1031 exchange as it pertains to investment real estate sales?
Yeah, so I'll speak on just real estate investing because that's the area that I'm the expertise in, and really any other areas when it comes to like stocks, bonds, crypto, I wouldn't call myself anywhere near an expert, right? If anything, I should probably be sitting in the rooms listening to the experts talk. But my biggest frustration that I've personally seen as an individual who has exited large apartment complex deals, as individuals who have talked to sellers. And it's funny because, over the last 6 months, the sellers that I've spoken to, it seems like there's more 1031 interest than it's been in a long time. And I think a lot of that's because prices of assets have grown tremendously over the past 4 to 5 years. And they see the capital gains tax bill that's ahead. And for me, a biggest frustration with even the whole concept of capital gains taxes, well, I guess taxes in general, right? If you think about the concept of what this country was founded on, I mean, we went to war over what, a 2% tax. Now our ordinary income's at like 37, our capital gains at 25. Like, it's insane. But for me, I look at the incentive. What is the financial incentive for people to do what they're doing? And that's why I love capitalism so much, is because it's a system that's predicated on incentivizing people to do the right thing. And for me, when you're talking about slapping on a quarter tax for real estate investors, increasing the value of their building, and I understand there's cyclical forces in which appreciation of an asset happens based on external forces. But if you think about what most real estate investors have done, especially in the syndication industry over the last 5-7 years, let's call it, it's really been the idea of a value add strategy. Let's buy a distressed building. Let's make it look nicer. Let's increase the income for that reason. And let's go ahead and sell it or hold it, right? But if you think about what people get dinged on, it's the capital gain. So there's really no incentive with the capital gains tax, especially if you have a president in the White House who's wanting to increase capital gains taxes. The incentive for guys like me and guys like you to go into these distressed buildings and make it look nicer. And, a lot of the socialist progressive individuals at this point would say, well, you're making money by raising the rent. Well, yes, but at the same time, us as diligent and shrewd entrepreneurs know and are smart enough that we can't raise the market. We can't raise the rent past what the market is telling us to do. So by increasing the amount of quality, clean, amazing, affordable housing that we're bringing to market, that's actually going to bring the market rent down, right? That's going to actually saturate what the market rent is. So we're not only helping, it's a win-win-win scenario. So we're increasing the quality of housing. The market rent is being saturated, so it's going down. So it's helping the consumers by having quality housing and having it be more affordable. And it's a win for us because we still have a bit of a guarantee and make a spread on that. So when you introduce something like a capital gains or you're increasing it, you're really de-incentivizing that process from happening. So I'd say for me, I know it's a long answer, but for me, that's probably one of the biggest frustrations.
100%. Yeah, you've got to make it a win-win for the investor who's taking the risk, who's taking on the loan, who is going to do the work to improve housing, which is one of the top number one crises in America is affordable housing. And not affordable meaning just the government's going to subsidize, just more housing that actually is within a range where renters can rent and make sense of it with their income. Yeah. So in the 1031, I'm curious, Daniel, anything in particular, like any challenges when you've done 1031 exchanges or anything that comes to mind with that?
No, not actually for me, no, right? Because for me, but I mean, for a lot of sellers that I'm looking at, a lot of them are 1031ing into limited partnership positions. A lot of them are doing the whole DST, right? Which for those that don't know, it's the Delaware Statutory Trust. Where you're virtually 1031ing into an LP position of a fund or a trust that's been set up by an operator. But even those things, I haven't gotten a whole lot of positive feedback from individuals that have done it. From what I hear, the returns aren't amazing, and there's a lack of control, right? So, for me personally, no. But even, yeah, I just say I'll just stick with no.
Yeah, absolutely. And we call that the shotgun wedding, right? When you're getting married to a Delaware 1031 and 45 days, 180, and you're tied up for 7 to 10 years with huge fees, no control, no liquidity, no diversification, no chance to be entrepreneur and to run your own deals. And that's why we offer what's called the Deferred Sales Trust, not to be confused with the Delaware Statutory Trust. Anyone who's listening to this, where you can be an entrepreneur. You can buy and sell real estate at any time. You can invest into liquid investments. You can exit out of crypto, primary homes, LP, GP positions, carried interest, captive insurance. And it's amazing. It means you have $1 million net proceeds, $1 million gain. If you want to learn more about that, you can go to capitalgainstaxsolutions.com. It's capitalgainstaxsolutions.com.